How's it going, everybody? KCG Trades here, back with another weekly watch list and stock market outlook video. I did take a bit of a break last week due to the fact that I just wanted to, clear my head, get away from the markets, get away from YouTube just for a couple of days. It certainly worked, as I'm feeling much more rejuvenated and refreshed now. We all need that little bit of a break just to clear our heads. So with that being said, I'm back. I'm ready to go, ready to have an amazing week, and I hope you guys are too. So let's just get right into it. So starting off with how last week went, I would say it was more positive than negative, even though the price action was all over the place. The main reason I say this is because we are starting to see some traditional growth names starting to catch a bid and get some love back in the markets. While most of the 2020 growth names are starting to base, reset, or actually completely done, we are starting to see some of those names start to reemerge as leaders once again, so that's always a good sign. But what's even better is we are starting to see new growth leadership form that looks ready to lead the next uptrend. We're also starting to see some recent IPOs attempt to break out and show their institutional footprints. So in the next coming days and coming weeks, I want to see if that momentum can continue. But one negative thing I am seeing in this market is how quick the rotation is happening. It is very hard to gain some traction in this market. So until that changes, if you are actively trading in this market, I would just recommend to be on your toes and just take profits as quick as you can and raise stops as soon as you get a nice cushion. But at the end of the day, price and charts tell all, so let's do just that by looking at the indexes, starting with the Nasdaq Composite. So if we take a look here, for the past 5 months from January till now, we have been in a range-bound consolidation, finding support at the 12,500 levels and finding resistance at the 14,200 levels. Essentially now we're just going sideways back and forth, and we are having some turbulence around the moving averages. So I do want to see how it acts in the next coming days. What I would prefer is a move above the moving averages, above that 13,600 level on good volume would be preferred. That would be the most bullish action, just to show that we got above some turbulence on good volume, of course. But if not, I wouldn't be surprised to see some more sideways action or even retest of these lows. Because we are in a consolidation, anything can really happen, and there's no real movement until we get above or below that consolidation. So until then, we do want to stay patient, but I would love to see it get above those moving averages. But on the bright side, like I mentioned, how the new leadership is starting to form, it is starting to occur while the indexes, especially the Nasdaq, is just in range bound. So that is good to see, and we want to see if that could lead the overall market for the next uptrend, like I mentioned earlier. So that's really what I'm seeing with the Nasdaq. We can't really predict anything because we're not in the prediction business, we're in the interpretation business. As of right now, we're just in a consolidation, so we do want to wait until something really occurs before we could start getting really aggressive. So if we take a look at the S&P 500 index now, we do see here that it has been on a nice prior uptrend, much stronger than the Nasdaq. It's only been consolidating for the past 2 months compared to the Nasdaq and its 5 months. We have been seeing some nice bounces off the 50-day moving average, which is good to see. So essentially no complaints with the S&P 500. We just want to see it continue this uptrend, continue to make higher highs and higher lows, and we'll have no complaints. That's pretty simple, very easy chart to read and interpret. So if we take a look at some other indexes, let's take a look at the IWO, which is the Russell 2000 growth. Now this is a chart I'm not too bullish on, mainly because it is wide and loose. It is very sloppy, and that's not the type of action you want to see in a chart. If we take a look here at the recent action, I am starting to see a bit of a bear flag or bearish wedge here. We did find some resistance off the 10 EMA, and we finally got through it, but then we found resistance at the 21 EMA, so that is very tough to get through. Both ugly candles, and then so I wouldn't be surprised if we could actually break down below this bearish wedge and possibly retest the 200-day moving average. Obviously that's not the ideal situation that we want to see, and we would love for it to get back above these moving averages on good volume, but that's the pattern that I'm seeing right now, and if it does happen, then I wouldn't be surprised. But if it also gets back above these averages, I wouldn't be surprised as well, because of how this market has been acting. So as of now, we are just taking it day by day, because it has been difficult to decipher this market. So you're not alone if you have been having a tough time. If we take a look at the IWM, which is the Russell 2000 ETF, this is definitely a much better looking chart. We see a nice prior uptrend and a nice controlled consolidation that looks ready to possibly resume a new uptrend. This is a chart that looks much better if we take a look at the difference between IWM and the IWO. Obviously, just by the eye test, in recent action, the IWM looks much better. So we have been consolidating since February, so about 4 months now. Same thing as S&P and Nasdaq. We are just having some issues around the moving averages. So it's just about a waiting game, patient day by day, seeing how it acts if we could get above these moving averages and eventually retest these highs, or if we can't find the strength to get above it, just retest these lows. We're all in the consolidation, so anything can happen. So it's the same thing like I mentioned. If we take a look at the 50, the IBD 50, this is another chart that's very wide and loose. Essentially any index or ETF that represents growth names possibly have a chart that looks like this, very wide and loose. So this is another one that you just want to be patient with. If you are trading any of the names in the IBD 50, you want to see that controlled volatility contraction type pattern before you want to get in. If we take a look at the VIX, we are seeing some high volatility recently, starting to get more controlled once again. We did get back above the 20s level, 25, 26, 27, but then we kind of calmed down, and now we're back in the 20 level, which is the most ideal situation, I think. So everything just looks like it has been for the past couple of months, that we are still in that consolidation, that sideways action. So we just have to play the waiting game. But the good news is we're not trading the indexes, we're trading individual stocks. And I do have some individual stocks that do look ready to break out or continue its uptrend. And for this week, I do have 8 names on my watch list that I want to pay attention to for this week. And we're going to start the week off with AMAT, Applied Materials. So Applied Materials and other semiconductor names are starting to set up once again. If we take a look here at the daily chart, it is setting up for a nice downtrend line breakout above this 131 level. Did get back above the 10, the 21, and 50-day moving average. And on Friday, we did have a nice inside day on lower volume. If we even take a look at the weekly chart, we could see here that it did have an inside week and it found support at the 21 weekly. So it does look ready for another move higher. Essentially, like I said, just looking to break out above this downtrend line on good volume. Getting above that 131 level is exactly what I'll be looking for. Very simple. And the next stock I'm watching is CROX. So I am very impressed with how CROX has been acting for the past couple of weeks. We did have a nice earnings gap up on very, very strong volume on April 27th. And since then, it has held the close of that day. So the close of that day has been the 97.80 level. And ever since then, each day has been respecting that level. It did undercut it 1 or 2 times, but we always closed back above it, including Thursday and Friday. So we are now finding support around the 21 EMA, as well as finding support at that high volume close. So that's exactly what you want to see in a strong stock, and this is what we're seeing in CROX. After a nice consolidation breakout, it has been consolidating once again. So in terms of the setup that I'm looking for, I actually like the setup that's occurring right now, finding support 3 days in a row off the 21 EMA. I want to see get above Friday's high, above the 100.80 level. So I really want to buy around the 100.90 level if we could get some good volume. If we take a look at the past couple of days and weeks, we have been we have been pulling back on lower volume. So that's exactly what you want to see as well. Essentially, all the action that's going on in CROX is very bullish and very positive. So I just want to see it back above the 10 EMA, and I'll be looking to buy and see if we could have a continued move higher. That's pretty much it with CROX, and the next stock I'm watching is DoorDash, DASH. So DoorDash is not really the type of trade I would take right away, but what I'm seeing in the stock is very constructive. If we take a look here at the it has been undercutting the IPO lows, and it actually recovered on very strong volume on May 14th, got above all of its short-term moving averages, the 21, the 10, and the 50-day moving average. And since then, it actually has been flagging, making a symmetrical triangle very nicely. The volume has been above average, but the action has been very controlled. So it does tell me that institutions may be putting their footprint into this and controlling the stock. That's always bullish signs, and the fact that we're holding above the moving averages is a good sign as well. So essentially, I'm looking for a break above this flag. I would really like to see a break above Friday's high, above the 138.89 level. So essentially 139 is what I'm looking for. If we could get higher volume as well, above the regular average of 4 million, that would be very ideal. And we do have a lot of overhead resistance, as we obviously see some resistance 167 and of course these levels, but it does have lots of room to run if a breakout can occur. So that's really what I'm watching for with Dash. Obviously the stock is a bit more volatile than others, but the fact that it has been controlled for the past couple of weeks is very bullish. Your stop would be right, your stop loss would be right below the flag here, so I would put it right below the 10 EMA, which is around the 134 level, and you're looking to buy around the 139 level. That's my game plan, so I want to see how it plays out in the next coming weeks. So that's pretty much it with Dash, and my next stock is HYRE. So HYRE, or HYRE, has been showing tremendous strength over the past couple of weeks. There is no real setup occurring right now because it did go from the lows of $9 to all the way to $18. So basically doubled in price in about 2 weeks. So that's really, really impressive. Now we don't want to chase the stocks and we do want to wait for the proper setup, but I do want to put this on my watch list just to see if there's any opportunities that will come about, because a stock doubling in a week or two is showing us that there are institutions stepping in. If we see here May 14th, there's 20 million in volume. That's definitely some institutions stepping in, and the setup did just recently break out. So I want to see how it acts in the next couple of weeks, months, to see if we get a nice pattern forming where I could get in, because obviously this stock has some power to it. So that's pretty much it with HYRE. No real setup like I mentioned, but it's just one to keep on your radar. The next stock is Roblox, RBLX. So Roblox has had two monster moves in the past couple of weeks. One on May 11th when it went from 65 to 77, and then one on this past Friday from 77 all the way to 84. Wasn't as big as a monster move as May 11th, but it was still on very strong volume, which is good to see. It did hit all-time highs, but didn't close above all-time highs. So essentially for the setup that I'm looking for, the first one would have been if you got this entry above the 77.85 pivot, but if you weren't able to get in that, what I'd be looking for is some sideways consolidation for the next couple days and maybe even weeks. Get some more inside days just to digest the move that it just had from 65 all the way to 80s. If we could get some sideways action, some inside days for the next couple of weeks, days or weeks, that would be my signal to enter this long and then hit all-time highs and then clear skies ahead. So that's really what I'll be looking for. If it doesn't happen, I wouldn't be surprised, but I wouldn't want to enter. I wouldn't want to chase this stock because it is quite volatile and you want to wait until the volatility contracts. But that's essentially what I'll be looking for in this stock. The next stock I'm watching is UPS. So UPS has been acting very constructively for the past couple of weeks. If we see here, we had a nice huge volume candle with almost 15 mil volume on this nice gap up, and it's just been drifting higher ever since. And since about the month of May, we've just been consolidating, starting to build this little bull flag symmetrical triangle here, and we are starting to find support at the 10 EMA. So I would be interested if this continues to hold the 10 EMA. I wouldn't be surprised if it does hit the 21 EMA, but if it continues to hold the 10, that would show that this stock is very strong and gearing up for another move higher. Essentially no setup yet because we are just still in this little triangle here. I want to see a couple more days of consolidation and inside days, and then if we could break above this downtrend line, this triangle here around the 215, 216 level, that would get me very interested in this stock. So that's really what I'm looking for. Very simple. And the next stock I'm watching is UPST. So Upstart is one of the new growth leadership that I was mentioning that does look ready to lead the market higher. In terms of how the chart is acting, for the past week, it has been very constructive and very strong. Going up on higher volume, and for the past week it went from $85 all the way to $153, so almost doubling in price. It did break out of this pivot of 122 on very strong volume as well, so these are all good signs that we're seeing with this stock. We're very close to breaking out into all-time highs, so I wouldn't be surprised if it actually does it next week. This is another one that doesn't really have a setup as of yet, but because it could possibly be a new leader, I do want to put it on my watch list to see if there's any possible entry that forms throughout the week or the next coming weeks, because obviously you want to enter the strongest stocks, but you don't want to chase. So that's really what I'm watching for UPST. I really want to see it get above all-time highs and continue higher and lead this new uptrend, because we are looking for a new leader, and I wouldn't mind UPST because the fundamentals are amazing. But that's pretty much it with this stock. And the last stock I'm watching for this week is ZIM. So ZIM shipping services have been one of the strongest stocks as of late for the past couple of months. It has really been respecting that 21 EMA and has been on a nice uptrend ever since February. If we take a look here, has been very strong, bounced off the 21 EMA, went into new all-time highs, and on Thursday and Friday we had 2 inside days, so a double inside day on lower volume each day. So that's very bullish, and that's exactly what I want to see. Essentially what I'm looking for is a break above the inside day, $46.78, so 10 cents above it, so around $46.88 is what I'll be looking to enter and see if it could continue its momentum as it chugs along higher. Very simple pattern that I'm looking for, and my stop loss would be just under the low of the second inside day candle, so I'm not risking much if I do end up getting into this stock. But besides that, that's pretty much it for the day. Hope you guys enjoyed this video. If you did, please leave a like down below, subscribe if you haven't, share with your friends and family. You guys already know the drill. Hope you guys have a wonderful week and take care. Stay safe.